Hello students, I have prepared one more video for you, and in this video also I will discuss how to prepare the balance sheet and profit loss account of banking company with another example. The adjustments are different here. Okay, now you know now that as per form A we should prepare the balance sheet, and form B we should prepare the profit loss account. Now you are familiar with the schedules of balance sheet as well as the profit loss account. So let's read first the adjustments. So this is the first adjustment. We have to make a provision for bad and doubtful debts. Second is we have there is a bills for collection and the value is 1,05,000. Next is acceptances, endorsements, and other obligations. And next is we have to make a provision for rebate bill discounted. Then next is provision for taxation. Then next is so we have a closing stock of postage stamps and stationery as on 31st March 2020, and we are told to prepare the financial statements. Now, you know the two important rules, and these two rules should be considered while preparing the balance sheet and profit loss account of any entity. The first rule is if any ledger has a debit balance, then it would be either asset or expense. If it has a credit balance, then it would be either liability or income. Now, see the first particular in the problem is premises less depreciation. It means depreciation is already deducted, depreciation is already charged, and the value is A1,85,000. It has a debit balance, and we have schedule number 10, that is fixed asset. So under schedule number 10, fixed asset, we will record it, we will show it. That is here, premises less depreciation. The value is 1,85,000. Okay, the next is now money at call and short notice. It has also debit balance and it is an asset of the bank, but we should show it under schedule number 7, that is balances with banks and money at call and short notice. So here, okay. Now the next is furniture less depreciation. The depreciation is already charged on the furniture. I mean to say, from the value of furniture is already deducted. So and we must show it under schedule number 10. So schedule number 10 here, that is furniture, the depreciation, it is fixed asset 30,000. I think, if I'm not wrong, the value is 30,000. I'll check it, but I'll check it. Yes, 30,000. Okay. Now depreciation on bank's asset, it has debit balance and it is an expense of the bank, but it is that expense other than interest payment, so it will go under schedule number 16, that is operating expenses. Here, depreciation on bank's asset. Okay, next is non-banking asset acquired in satisfaction of the claim. The value is 20,000. It has debit balance. It is an uh, it has debit balance. It is an asset of a bank, but as it is acquired due to the non-payment of loan by the client of the bank, so it is treated as a non-banking asset, and it comes under schedule number 11, that is other asset. Now you know the concept of non-banking asset. If you don't know, then go through the previous videos, you will get the idea about it. Why is it called as non-banking asset and what kind of asset is it? You will get the answers in my previous theoretical video lectures. Okay, now the next is cash in hand. See, cash in hand, it has debit balance and it is an asset of a bank, and we have schedule number 6 for it. We will show it under schedule number 6, that is cash and balances with RBI. Cash and balances with RBI. Here, cash in hand. Okay, now the next is cash at banks. Now see, cash at banks, the word is cash at banks. There are multiple banks, and in that multiple banks, this bank has a cash, and the total is 2,50,000. Now sometimes students feels that it is cash with RBI, but specifically to what is mentioned here, cash at banks, and banks plural word is there of bank. So it is the cash balance with multiple banks of this bank. So it will go under schedule number 7. Schedule number 7, that is balances with banks and money at call in short notice. So here, okay. Okay, the next is now we have investments. It has also debit balance, and it is an asset of a bank. And for recording the investments, we have schedule number 8, investments. So we will show it here. Investments, the value is 3,50,000. Okay, the next now loans, cash credits, and overdrafts. Now see, it has debit balance, and it is one of the most important asset of a bank. And you know that the most important asset of a bank is an advances, the loans given by a bank to its clients. So it will go under schedule number 9, advances. So here, okay, advances 12,65,000. Okay, the next is interest on deposits and borrowings. Now see, it has a debit balance. Now it is an expense of a bank, interest rate expenses, and interest is paid on deposits, and that is, these are the monies which is accepted by bank from its deposit holders, and that sum of rupees 2 lakh also includes the interest paid on the borrowings made by this bank, whatever sum it has borrowed from other banks or other institutions or other parties. On that sum it has paid interest. So the addition is 2 lakh, and it is an expense of a bank. And for recording interest rate expenses, we have schedule number 13. We have schedule number 13. We will sorry, schedule number 15, interest expended. It is not income of a bank, it is an expense of a bank. Sorry, 2 lakh rupees interest on deposits and borrowings. Okay, now the next in the problem is we have audit fees, then salaries and allowances of staff, director fees. Now these three have debit balances, and all these three are nothing but the expenses of a bank, and these are the expenses other than interest paid. So we must show these ledgers under schedule number 16, operating expenses. So here, operating expenses. Okay, audit fees, salaries and allowances to staff, and director fees. Okay, then next is, now we have postage and telegrams. The value is 1,350, but it has an adjustment. It has adjustment. But let's show first this value in schedule number 16. That is our operating expenses, postage and telegrams. I'll show that figure here. Rupees. What is the figure? The figure is 1,350. Okay, 1,350. So 1,350 here. 1,300. I have shown it in inner column. I'll tell you why. Because see, it has adjustment. What is the adjustment? That the closing balance of postage stamps is 160 rupees 160 as of 31st March 2020. Let me tell you. See, the total purchases of postage and telegrams in this accounting year, that is 1920, is 1,350. But out of this 1,350, the closing balance of postages is 160. It means what? Out of 1,350, used postages value is 1,190. Therefore the actual expenditure of this bank on account of postage and telegrams is 1,190, not 1,350. I'll tell you again. Out of 1,350 is the total value of is the total purchase value of postage and telegrams, and out of this 1,350, unused postages value is 160. It means used postages value is 1,190. Therefore it is an actual expenditure of a bank, so we should deduct this value 160 from schedule number 16, that is operating expenses. Here we should deduct it, that value here, rupees 160, rupees 160 we should deduct it, and from deducting 160 from 1350, the actual expenditure is 1190. And the second effect, now see that much postages are are in hand as on 31st March 2020, and the same will be used in next accounting year, so such a will be treated as an asset of a bank, so we should consider it under schedule number 11, that is other assets. So the postage stamps 160. Okay, now the next in the problem is printing and stationery. It has also debit balance, it is also an expense of a bank, but it has also an adjustment. But first we will mention it in schedule number 16, that is operating expenses. Here, oh shit, something happened wrong. 3700, okay, 3700, 700, okay, it's 3700. Okay, now from 3700, okay, now see the adjustment. What is the adjustment? The adjustment is see, stationery of 700 was in hand, so it means what, out of 3700, 3700 is the total value of purchases on account of printing and stationery, but out of that 3700, the stationery of 700 is on hand as on 31st March 2020, so it is the closing stock. So out of 3700, used or consumed value of printing and stationery is rupees 3000, rupees 3000. Therefore the actual expenditure of this bank on account of printing and stationery is 3000, and the 700 worth rupees stationery can be used in next accounting year. That's why it is treated as an asset in the current accounting year. So it is treated as an asset, and it will be treated as an asset, and in the schedule number 11 other asset, the value is 700. Okay. Okay, now next is other expenditure. Look, other expenditure, it has debit balance, so definitely it will go under schedule number 16. So here other expenditure and 2450. Next is interest and discount. It has a credit balance, it is bank's liability, sorry, income, it is not bank's liability, it is an income of a bank. Why is it an income of a bank? Because this ledger has a credit balance, and if any ledger has a credit balance, then it would be either liability or income, but we all know that interest and discount is bank's income, and for recording this income we have specific schedule, that is schedule number 13, interest earned. So show it under schedule number 13, interest earned, in the column of current year, 3,67,500. Okay, interest on schedule number 13. Next in the problem is we have now the value of authorized share capital. Now the in authorized share capital, there are 7,500 equity share, and the value of each share is 100. So first mention that capital, authorized capital in schedule number 1 here. So 7,500 into 100, therefore the value is 7 lakh 50,000. 50,000 is the authorized share capital. Now issued and subscribed share capital is 6,000 equity shares, and the value is 100 each, and it means issued and subscribed capital and paid up capital is 6 lakh. So issued, subscribed and paid up capital, that is rupees 6 lakh. 6 lakh subscribed and paid up capital is 6 lakh. Okay, now the next is statutory reserve. It has a credit balance, it is an we have to consider it under schedule number 2 reserve and surplus. Here it is an opening balance of statutory reserve 1,20,000. Now the next is deposits. The total value of deposits is 12,50,000, and it has a credit balance. It is a liability of a bank, and we have specific schedule for it, that is schedule number 3 deposits. Okay, record that value here under schedule number 3 deposits. Okay, the next is, now we have Provident Fund. Okay, its value is 1,35,000. It has credit balance, and it is also liability of a bank, and we have to consider it under schedule number 5. So Provident Funds. Okay, 1,35,000. The next is borrowings from Maharaja Bank Limited. So it is bank's borrowing. Now it is also liability, and for such a liability we have schedule number 4 borrowings. Here we have to consider it under schedule number 4 borrowings. Now the next is we have unclaimed dividend. It has also credit balance. It is also bank's liability. Let's consider it under we have to consider it under schedule number 5. Record it under schedule number 5, that is other liability and provisions. Unclaimed dividend 4,000 rupees. The next is commission and exchange. Okay, commission exchange credit balance. It has credit balance. It is bank's income, and for recording this income we have schedule number 14, that is other income, because we know we have to record the interest related income in schedule number 13, and income other than interest received we should consider under schedule number 14, that is other income. Okay, then next is the profit on sale of non-banking asset. It is 1,200 rupees, so it is bank's income. So it is that income other than interest received, so it will also go under schedule number 14, other income. Okay, that next is now profit and loss account on 1st April 2019. Here we are preparing balance sheet as on 31st March 2020. So this is the profit at the beginning of the accounting year. So we should show it under profit loss account, that is form B, in third part next to profit brought forward in the column of current year. Okay, the next is now we are done with the particulars of trial balance. Now let's discuss in detail all the adjustments one by one. The first is we have to make a provision for bad and doubtful debts. So against the irrecoverable loans, that much provision we are supposed to make. So first show this under provisions and contingencies, 10,000 rupees here, 10,000 rupees, and the next effect is we have to deduct it from schedule number 9 advances to calculate the net advances of the bank. So here 9,000 rupees, sorry, 10,000 rupees. Okay, so in schedule number 9 advances. Okay, now two effects are, we are given two effects. The next is now we are done with this adjustment. Now the next is bills for collection. Now it is mentioned at the as a footnote in the balance sheet here, 1,05,000, 1,05,000. Okay, bills for collection. Now if you don't know what is exactly bills for collection, please watch my previous videos, especially theoretical videos where I explained all these terms. The next is acceptances, endorsements, other obligation. The sum is rupees 52,000, and we know that this is contingent liability. So under schedule number 12, we have to show it under schedule number 12. Okay, 52,000. Now the next is rebate and bill discounted. Now you know that there are two effects of an expired discount. That is, first deducted from schedule number 13, interest earned 1,500 rupees. So schedule number 13 interest earned 1500 rupees. And the second effect is show it under schedule number 5. Revenue bill discounted, as revenue bill discounted closes with credit balance here 1500. Okay, now the next is, okay, we have provided two effects of this adjustment. The next is we have to make a provision for taxation. Okay, 10,500. Okay, first make a provision here under provisions and contingencies. Okay, here 10,500. Okay, after that show it under schedule number 5, 10,500. Okay, schedule number 5, 10,500. Now uh, we have discussed all these adjustments, and we are also done with the particulars which are part of trial balance. And now let's close first the profit loss account. Always close profit loss account. I mean to say, always close schedules of profit loss account before closing the schedules of balance sheets. So from the total of 3,67,500, deduct 1,500. So the total net income is 3,66,000 from schedule number 13. From, I mean to say, from interest and discounts, net income is 3,66,000. So 3,66,000 here. Okay, now schedule number 14. Let's calculate bank's income under schedule number 14. It is rupees, so 38,700. So it is bank's income which is other than interest. So 38,700. 38,700. Now let's calculate the total income of a bank before deducting the expenditure. So this is the income of this accounting year before deducting the expenditures. 4,04,700. Now let's close schedule number 15. There is only one figure, 2 lakh rupees. So here show the summary, 2 lakh rupees next to schedule number 15. Okay, now operating expenses. Now add all the operating expenses one by one. Now you have the total 66,640. So here show 66,640 and provisions and contingencies. So the total of these two is 20,500. So here show the summary, 22,000, 20,500. No? I'll check again to ensure 20,500. Okay, now let's make addition of these three figures to find out the total expenditures of this bank in the accounting year 2019 and 20. So 2,87,140. Now here we can say that the incomes to the total incomes are more than the total expenditure. So let's calculate the current year net profit. For that, do one thing, from the total incomes deduct the total expenses, you will get the current year profit, that is 1,17,560. Now calculate the total income. So this is the lifetime income of this bank up to 31st March 2020. So in the entire life of this bank, it has earned income of 2,29,860. Now let's make appropriation. So 2,29,860. Now here first transfer a sum equal to 25% of net of the net profit of the current year to statutory reserve. So 25% of current year profit, that is 1,17,560. So this is the amount, 29,390. So here we have to transfer 29,390 to statutory reserve. So 29,390, schedule number 2, 29,390, and the current year profit is 1,17,560. 1,17,560. 1,17,560. I'll again calculate it to ensure one more time. Just a minute. I'll again calculate it to ensure that the figure is right. So 25 divided by 100 into 1,70,560, 29,390. This is the right figure. Okay, now let's calculate. Let's close now the profit loss account, and for that we have to deduct from this figure, that is 2,29,860. We have to deduct 29,390. So the balance carried out to balance sheet is 2,470. 2,470. See, the total is 2,29,860. It is right. Okay, 2,470. 2,470. Okay, 2,470. Okay, it is closed now. Now let's close all the schedules one by one. First, capital. So here 6 lakh rupees. So 6 lakh rupees. Here record the summary of schedule number 1, 6 lakh rupees. Now schedule number 2, reserve and surplus. The total of these three figure is 3,49,860. So here 3,49,860. Schedule number 3, the total is there is only one figure, 12,50,000. So 12,50,000 rupees. Okay, now schedule number 4, borrowings. Now here borrowings 2,55,000. Here 2,55,000. Now schedule number 5. Schedule number 5. The total is 1,51,000. So here 1,51,000. I'll add all these figures. Therefore, total of the capitals is capital and other liabilities is 26,05,816. Now let's close the schedules. The asset schedules. Let's begin with 6 number schedule. 3 lakh rupees. So here 3 lakh rupees. Okay, the next is schedule number 7. That is balances with banks and money and college. Money at college short notice. The total is 4,65,000. So here 4,65,000 rupees. Now investments, schedule number 8. There is only one figure. Okay, 3,50,000. So 3,50,000. Advances, schedule number 9. There are two figures from 12,65,000. If you deduct 10,000, then the answer is 12,55,000 rupees. So 12,55,000 rupees. Here, okay, fixed assets number 10. The total is 2,15,000. So here mentioned 2,15,000. Okay, now other assets, schedule number 11. Schedule number 11, other assets 20,860. 20,860 here 60. Now let's calculate. Now 26,05,860. Is there contingent liability? There probably, yes, there is. So the value is 52,000. So 52,000, we have to show it here. 52,000. Now this problem is over. You can see here the balance sheet. Now you can see here the balance sheet is tallied. See, the total of liabilities equals to total of assets. So balance sheet is tallied. This account is also closed. Thank you.